Hello students. So we are going to start a new chapter named as Depreciation, class 11th Accountancy. This is first part, and in this video we are going to understand all the concept about depreciation. Learning objectives are: what is depreciation? Related terms, that is depletion, amortization and obsolescence. Causes of depreciation, objective of charging depreciation, factors affecting depreciation, relevant accounting principles and methods of allocation of depreciation. So let's start. What is depreciation first? So depreciation means decrease in the value of fixed asset due to their use in the business, passage of time or obsolescence. So suppose you purchase a car and you use this car for some purpose. Suppose you use this car for running in Ola, right? So after using it for 1 year, some value of this car must be deteriorated due to normal wear and tear. So this is called depreciation. Suppose if that car met an accident, so that loss will be included in capital loss, not in depreciation. So decrease in the value of fixed asset due to their use in business, normal course of action and passage of time or obsolescence called depreciation. Okay. Now depreciation as per accounting standard 6. Depreciation is measure of the wearing out, consumption or other loss of value of depreciable asset arising from the use, and obsolescence called depreciation. Depreciation is allocated so as to charge a fair proportion of depreciable amount from the fixed asset during useful period of time, useful life of the assets. As you term that your asset will be lasting is useful life of the assets. Depreciation include amortization of asset whose useful life is predetermined. So the useful life is always predetermined. Amortization of asset should be done on the basis of this. Depreciable assets. Depreciable assets are expected to be used during more than one accounting period, which are having long-term validity, have a limited useful life. You term some useful lives for the particular assets, are held by the enterprise for the use in the production or supply of goods and services, for rental to the other, or for administrative purpose and not for the purpose of sale in the ordinary course of business. So these assets will be depreciable. Now, what is the difference between depletion and depreciation? The term depletion refers to the physical deterioration by exhaustion of natural resources like quarry, mines, oil wells, etc., which are wasting asset. Due to mining or extraction, the stock of mineral, oil or that asset which may not be renewable in normal course of action, which are non-renewable sources of resources, these assets got depleted. Okay, so usually depreciation is not charged on it, depletion charge will be charged on it. Amortization. Amortization is refers to the economic deterioration of intangible assets. Only fixed and tangible assets charge depreciation on non-tangible or intangible assets like goodwill, patent, trademark, copyright, etc. charge amortization. It is a practice to write off the intangible assets over a reasonable period when a part of an intangible asset is written off, called amortization. What is obsolescence? The term obsolescence refers to the economic deterioration of asset due to change in technology, invention or improved equipments, market decline due to change in the taste and fashion, or inadequacy of existing plant to meet the increased business. So sometime your technology or your fixed asset may be outdated due to improved technology or equipments, and because of this that machine, that fixed asset may be obsolescence. So it will be recorded into obsolescence, and sometimes there is inadequacy of machinery to meet the increased business demands. So it will be termed as obsolescence. Depreciation affected by obsolescence as it decreases the value of assets. Okay. Causes of depreciation. Why depreciation occur? First is wear and tear. Fixed assets are purchased for the use in the business. You want to use them into your business for the purpose of production. Due to constant use of fixed asset in the business for generating income, the value of such asset is decreased. Suppose you purchase a car for running in Ola, that car will be used continuously in the business for the purpose of earning. So the normal decrease in the value of that asset will be wear and tear. Passage of time. If you put some asset for a long period of time, ultimately their value will be decreased. Suppose you purchase a car and you put it for a long period without running it, only that will be the depreciation will be occur due to the passage of the time. With the passage of the time, effective life of asset goes on decreasing, and certain assets like lease is the agreement between the owner and the user of the assets, and after the lease period is over, that asset will be taken back by the owner. So they have certain life. With the passage of time, the value of such asset goes down, even may not be actually used in the business. Depletion is a reduction of natural resources in case of wasting assets. Depletion is also caused in the fall in the value of assets like mine, oil, well and quarries, etc. Obsolescence due to invention of new technology. The asset based on the old technology may become obsolete and outdated. Accident may also cause in the permanent fall in the useful life as well as in the value of assets, and permanent fall in the price is also cause depreciation. Right? Now, what are the objectives of providing depreciation? It gives true and fair profit. It shows the asset at their proper value. Arrangement of fund for replacement of fixed asset. You may arrange them after knowing that your assets value is deteriorating. Ascertain the accurate cost of production. Compile with the legal provision and avail tax benefit. When you charge depreciation, you get tax benefit. You have to pay only less tax. Now, factors affecting the amount of depreciation. Assessment of depreciation and the amount to be charged in the respect of thereof in the accounting period are usually based on the following three factors. So, When you charge depreciation or assess depreciation, there is some things you have to keep in your mind. Historical cost or other amount substituted for the historical cost of the depreciable asset when asset has been revalued. Expected useful life of depreciable assets and estimated residue value of the depreciable asset. What is historical cost? As in second chapter, you have already studied about the historical cost. So, historical cost of the depreciable asset represents its money outlay or its equivalent in the connection with its acquisition, installation and commissioning as well as for addition to the improvement of thereof. The historical cost of depreciable asset may undergo subsequent change arising as a result of increase or decrease in the long-term liability on the account of exchange, fluctuation, price adjustment, change in the duties or similar factors. The useful life of depreciable asset is very important concept as it is predetermined by legal or contractual limits, directly governed by the extraction or consumption, depend on extent of use of physical deterioration on the account of wear and tear, and reduced by the obsolescence arising from the such factors like technological change, improvement in production or methods, change in market demand for the product, services output of asset, legal and other restrictions. Now, the first foremost method is depreciation is straight line method. Under this method, depreciation is charged by given rate of depreciation on original cost of the asset every year. It means you have to calculate the amount of depreciation only one time, and till the value of machine goes zero, you have to charge same amount of depreciation. Due to this reason, the depreciation charge annually remaining fixed, so the method is called fixed installment method also. It is also called original cost method because it is charged on original cost of the asset and estimated scrap value of the assets. So, if the rate of depreciation is not given, then the annual depreciation and the rate of depreciation is calculated by applying the following formulas. Annual depreciation, cost of asset less estimated scrap value divided by number of years. All these values are given in your question. So, cost of asset here means the cost on which you purchase the asset. So, here you have to remember when you purchase any asset and you pay some expenses for the installation of the machinery, it will be added in the value of machinery. Like you purchase 7,000 machinery and you pay 3,000 expense or carriage for the machinery. So, the total value of machinery will be deemed as 10,000, right? So, this is cost of asset. Estimated scrap value will be given in your question. The scrap value, that is last value or residue value of the asset after charging the depreciation, and the number of year estimated life of asset is also given in your question. Now, the rate of depreciation is annual depreciation and cost of asset into 100. Right? So, this is the method of calculating depreciation if there is no rate is given. What is the merit of straight line method? It is very simple. Quick calculation can be made. Asset is completely write off or written off if an asset continue with the firm for the whole of its useful life. The depreciation is provided by SLM, that is straight line method, it will be completely written off. Only scrap value of asset will be less. So this is very good. There is no window dressing on charging profit and loss account. So it will be quite good. And knowledge of original cost and total depreciation is charged. So when the depreciation charge in the various year is put on a graph, it gives a straight line. That will be OX, right? So due to this reason, this method is called straight line method. You can see here. Okay. Now we will solve a numerical. So in an example, cost of machinery is 77,760, useful life is 5 years, scrap value is after 5 years is 31,250. So you have to charge by SLM method, straight line method, annual depreciation, original cost less scrap value divided by useful life. Okay, so this amount will be charged every year as a depreciation. And now the rate of depreciation, so annual depreciation, cost of machinery into 100. So this is the method, and you have to put every information in the formula, and here is your answer. So now every year we have to charge only this, and the amount will be same as on original cost. And the written down value, after subtracting this value from this, you got this value from this is balance CD and this is balance BD. The balance carried down and this balance is brought down in this, and the amount will be charged as same as on first and second year. Now next method is written down value method of depreciation. Under this method, the depreciation is charged at fixed rate on the opening balance of the assets. This balance is reduced every year. So in the previous method, we charge depreciation on original cost, but now you have to charge depreciation on opening balance of the asset, and after reducing the depreciation every time you got new balance, and on that new balance you have to charge depreciation. Thus it is clear that under this method the value of asset as well as depreciation charge goes on reducing every year. Due to this reason, this method is also called reducing installment methods. The value of asset left after charging depreciation is called written down value. Due to this reason, this method is called written down value method. The rate of depreciation charge under this method is higher than that charge in straight line method. So this is the formula, calculation of rate of depreciation in written down value method. So R is here rate of depreciation, N is useful life of asset, scrap value of asset, and cost of asset. Okay, you can charge as in a previous question, you can place them and put into the formula. So every time you can see the depreciation amount will be charged, and there is change in every year in the amount of depreciation. That is, first year you have to pay 12,960 as a depreciation. Next year you have to pay 10,800. How it is calculated? 64,800, 16% is 10,800. So every time you have to change your amount of depreciation. Now what is the merits of written down value method? It is also simple, not very simple as SLM, but is very simple by comparing other methods. Depreciation on additional asset purchased during the year is calculated separately. There is no need to remember original cost of the assets. Equal charge against income. Under this, Depreciation charges reduce every year while repairing charge are increased. Thus, the total change against income remain the same, more or less. No undue pressure in the later years and provided by taxation authority. Taxation authority also support this method. So, this method is very good. But there is some demerits also. It is difficult to determine the rate of depreciation every time. It is quite difficult, and even if the asset become obsolete and unless the book shows some balance. Interest factor ignored, like the fixed installment method. Interest factor is ignored in a diminishing balance method also. No provision of fund for replacement. There is no provision for fund replacement as depreciation is not invested outside the business. It creates problem by replacing the asset when it becomes useless. Asset cannot be completely written off. In SLM method, it is possible to completely written off the assets, but in WDV method, it is not possible. No information about the original cost and accumulated depreciation. Under this method, the assets account show reduced balance after charging depreciation. Assets are grouped into the basis of rate of depreciation and become difficult to know the original cost and accumulated depreciation on any specific assets. So, here your chapter ends. Now, you have to remember all the merits and demerits of WDV method and SLM method, and if there is any doubt regarding any topic, you can ask me in your classroom. Thank you.